So, Chetan, thanks a ton, first of all, for making the time and talking to us at the finance story. When I saw Stellaris raising 300 million USD, right, and that is your third fund, and you promoted to the role of a CFO, and you've already been in the organization for a couple of years, and Chetan, my first question to you is the most obvious one. And when did you become a part of this fund, and how did your journey with Stellaris happen? How did you enter this entire space overall?
I'm a chartered accountant, and as a kid from school, college, I was always interested in the stock markets, companies, everything happening around you. I was fascinated with how companies are built, how founders work. During my articleship days, I did my this is my CA training. I did my articleship with a firm called Guru and Jana. I was lucky enough. My first assignment, in fact, was FDD, which is a financial due diligence for a tech company. As a kid, just go into office and you start off with FDD. I understood how the VCs work, what they look for into companies, and that's how my interest in this whole thing started. And during my articleship days, I also got opportunity to work with another VC fund, a lot of other DD engagements, both on the investor side, both on and the other side. And someday I wish that I could join a VC firm. And later on, after qualifying, I joined KPMG, and as luck would had it, I got an opportunity to work in the team which used to work with all the VCs in Bangalore. Helion was one of my audit clients, and when I decided to move out of KPMG, Nats was the CFO at Helion, offered me the job, and I got into Helion. That is step one. I was with Helion for about 7 years, and Stellaris was started in 2017 by three partners, Alok, Rahul, and Ritesh. And I knew all the three GPs. It's been 14 years now. And when they made this offer, I just jumped at it, and that's how I got into Stellaris. So it was my articleship days, then it was my audit client, which was Helion, and got into Helion and then to Stellaris. So that's how I entered this space.
So basically, your path was clear from your articleship days at Guru and Channel. You figured it out pretty early in your career.
Yeah, it just came my way, and I took it up.
And what is your role as, a lead finance professional at Stellaris? What's your role?
Stellaris, we started in 2017. It's an early stage tech focused venture capital fund. We have three funds. The first one is 2017. The second one was 2021. And the third fund, which we just closed, is 300 million. So together, we manage more than $600 million of assets. So we are also like any typical startup. The fundraising story is similar to any other investing company of ours. I would say it takes about 6 to 8 months for the whole process to start and close. We have the typical process of FDDs, ops DDs from our investors, negotiations of agreements. Vetting of our numbers, we open the DD room. So, like how we go into a portfolio company, do the FDD, LDD, ask those questions. It's the same for us as well. And The second is how do you structure the fund, where the investors coming from. The incoming investors do their diligence, ops DD. They look at our numbers. They review our portfolio companies. Why did we invest in them? The thesis behind them. The structure of the fund. What are the tax issues? All those things. It's like we asking questions or we doing a diligence in our portfolio companies. It's exactly the same way.
We've seen a lot of VC funds coming up, right? Every week there is some fund being announced and big numbers in many ways, even private equity. From where do you source LPs who invest? How do you discover them?
Yeah, see, it is a numbers at the end of the day, and the team, right? We do reach out to our investors, both prospective, and talk to them. Um, but with the India story, we are seeing a lot of foreign investors interested in the Indian markets. We see both inbound, and we also have outbound outreach programs.
Okay, that's because Stellaris is a solid brand as well. So it would be easier, and you all have track records to prove yourselves, like Mama.
Yeah, track record is the main thing. It's also the team, the investment team, the partners, the GPs, and the whole team. So usually, all the investors are also like we look out for deal flow. The investors also look out for good managers, the theme, the stage, also geographies. So they look for the track record of the managers, and sometimes it is inbound, or we reach out to large investors. At the end of the day, it is the team and the numbers which do all the talking.
Okay, so does the role of a CFO play a very important role when fundraising? I mean, does the investors ask who's the CFO?
So, from a finance legal point of view, the CFO plays a very important role. I would so one they do from a diligence point of view. They would like to talk to you, understand what we have been doing, hear out our valuation processes, all those things. So that's the ops GD part of it. Second is when they come in, the structure, how the fund is structured, the taxation point of view, the exits, all other things, which are the finer points during negotiations. They want to talk to the CFO and get their inputs. So the CFO plays a very important role, because once the fund is raised, the whole machinery starts. You are dealing with their teams day in and day out. You send your quarterly NAVs, their audit requirements, the ESG requirements, and all those things. So it's a very important role which the CFO plays in a fundraise and also in a fund.
That's amazing. When you talk about challenges in fundraising for your fund, what are the typical challenges that one can come through? And second one is, how has the journey been in terms of fundraising, in terms of investors? If you
So, for a new manager in Fund One, if I have to recollect, while the three GPs had a background from the previous fund where we're all working, it's a new manager. You don't have a clear track record. So, anyone coming in, for them to back a new manager takes a lot of time. And once you have raised your fund one, how to manage the fund. See, one is investment. Second is how do you manage the investor and the fund. That also is equally important. So once you've done your fund one and you have done all the right things, fund two relatively is easier. I'm not saying it is easy, but because you've already got a track record proven, the numbers are there, it's already run for 4 5 years, it becomes slightly easier. Then you can reach out to a larger set of investors, and also see, at the end of the day, somebody has given you money, and how much have you returned. It should be in black and white, right? That has to be answered. So fund one is definitely a little difficult. Fund two, fund three, the responsibility is there, but if your track record and everything is on paper, it becomes relatively easier. So the fund is run by the GPs, right? The people behind the show. The investors back, like we back founders. The investors back the manager. They call the fund managers or the general partners. Like in our case, Alok, Ritesh, and Rahul are the GPs. They are the fund managers, right? So it is basically them whom the investors are backing in fund one. Later on, the team is built. You have a track record, and it's a different story. So that's what manager means. So the manager is responsible to run the fund, whatever your theme is, how you invest, what kind of sectors you want to invest. You have already discussed with your investors.
Okay, that's interesting. Since the last decade, right? You've been in this space. So can you give us some highlights about how was the VC system back then? How has it evolved right now? And how is it further going to evolve?
Yeah, I think things have changed a lot since the day, from a Helion days. If I had to take an example, say when Flipkart started, not only did they have to worry about their consumer app, they had to also build the ecosystem around it, say the payments gateway, the logistics part, and all other things around it, right? But come today, you have service providers and everything ready. The payment gateways, the internet is so fast. The logistic is taken care by third party service providers. So if you have to see, the ecosystem is already built, plus the founders, high quality founders, and also the talent available to join these companies have come a long way. See, since the time one is the deal flow, I think we have seen at least 4x deal flow since the time we started. The quality of founders, repeat entrepreneurs, and what else? Um, and the whole ecosystem which has evolved. I think with AI coming, with more technology opportunities, I think India is at the right place to crack it.
Okay. And when you talk about the deal flow, like, has the increase in deal flow happened in the last 2 to 3 years, or you could say post pandemic, or it's been a gradual increase, or there has been a absolute spike at certain places before COVID as well?
No, I think it's a gradual increase. We did see a little bit of dip during COVID, but post COVID things have improved very well. Also, what I would like to highlight is initially when we started, there was skepticism around exit scenario. Right now, I think with more IPO opportunities and more tech companies being bought over by overseas companies, those things have been answered. Exitability is also proven and looks very positive.
That's exciting. And when you talk about India as a whole, and where do you see a large number of startups where you would be keen in investing, like your fund, and also overall from your past fund?
I
So,
think opportunity is across the whole of the country. Like consumers will be spread across the whole country, right? What I said earlier is India as a whole. But what we see is the main four, five, six cities where entrepreneurs like to start up. Like Bangalore, you would have seen in the news. It is the availability of talent as well, right? So that's where people or entrepreneurs like to start up. But things are opening up. We see the cities getting expanded. We are seeing opportunities coming from all over the country. But the main hotspots are your NCR, Mumbai, Bangalore, Hyderabad, those places. We have made investments in all the sectors. We have startups in Calcutta. We have in the north of India, south and west. I think India is one of those few countries where you're seeing GDP growth of 6 to 8%. You have a very young population with good smartphone adaptability, bandwidth, affordable bandwidth, high quality bandwidth, and a lot of high quality founders, entrepreneurs who are ready to come start up, repeat entrepreneurs. I think things could not have been better for where we are in India now.
and what is the sector Stellaris is most excited about?
We are a tech, we are an early stage venture capital. We like to back tech and tech enabled companies, AI, consumer tech, SaaS, fintech, uh, and sustainability are the sectors we like to back.
Okay. And when you're talking about fintech, a lot of changes in regulations, right? So, how do you look at fintech in the lending space specifically?
Things are evolving. It's a regulated sector, right? But it looks more promising. We are very positive about it. Your whole payment space, we have backed, like if I have to talk about our portfolio company, we have Propelled, which is into the lending space. We have Kiwi, which is UPI on credit on UPI. We have Rupee Card. So we have a few fintechs in our portfolio, and we are positive about it. Going forward, while regulations, say when I was just at an event recently where Razorpay, when they started, there was nothing regulated. Right now, when more companies start get into this space, the regulators will also come up with their what do you say, framework where they want the companies to work. As long as both can be managed, I think things look very positive. And regulations are necessary, right? While you may have 10 companies who are doing well, one black apple can whole disturb the whole place. So regulators are also conscious. So I think it should be a mix of both technology and regulation. It's good to have.
You talk about due diligence and all of those different aspects, right? How do VC firms work with say CA firms or advisory firms, and how do you discover these firms, advisory firms? Because everyone wants to work with a venture capital or a funded startup. So
Yeah, so we do three kinds of diligence. One is the business diligence, which is done by the mainly the investment team. In our fund, we do it in house. Second is the financial due diligence, and third is the legal due diligence. Right. So financial due diligence, you review whether the numbers are fine, clean, true and fair. There's nothing fishy, and we can give a there are no red flags. Right. How do we legal diligence is the same from a legal point of view, whether all compliances everything are done. So these so from my team at Stellaris, from the finance team and the legal team, we look at the FDD and the LDD part. I have a colleague to look at the LDD part now. From FDD, how do we discuss firms? Obviously, you have the big fours, and also the top firms where there should be a sector expertise also. Say if we are looking to invest in a NBFC, whether that firm has expertise, have they worked with those kind of companies in the past. We don't want to take a firm which is a specialist in SaaS and ask them to do FDD. They'll be asking the wrong questions, and the founder will get frustrated. We will not be able to get the reports which we want. So it also depends on the kind of firm, the size of the firm, whether they have expertise in that sector. That's how we shortlist the CA firms. It's also sometimes um, um, say in a consumer sector, if you have to look at across the country, there are a lot of locations, whether they have reach and the ability to go to different geographies to do it. Ultimately, it also comes down to the cost. How much are they charging for each of them, those engagements? But mainly it is a sectoral expertise, and how good they are at that job. Have they done this in the past?
If somebody wants to be a CFO of a VC firm or even of a at a startup, right? So what would you tell them?
So I'll start off with the VC firm first. Like you mentioned, the supply and demand, there's a constraint, right? So when I have if some firm wants to hire in their finance team at any levels, the ready-made talent which is available is constrained. The supply is constrained, and at the same time, somebody in the VC firm, they want to move out and look at other opportunities in the VC space. The demand is also constrained. So that's but having said that, like we discussed earlier, the opportunities are opening up. We see a lot of VC firms coming up, both domestic and foreign. So the future looks bright. The opportunities are there. Uh, but for anyone coming into this space, I think they have to come with a long-term mindset in mind. This is like a test match, and not like a ODI or a T20, because the fund life is 10 years. It is not that our quarterly results come out, or annual results come out. We invest. The average holding period for any company is about 6 to 8 years. So you have to be patient and be with the firm. So one is the supply and demand constraint, the long term mindset, and also to be more focused on quality, and be more focused on each and everything. Sometime, and also how quickly you react, how you analyze things, and turn around things. That is the main thing here. From a salary or a career growth opportunity, I think because the supply is constrained, it will be at par with industry. I don't see a huge difference between my colleagues who are in the practice in any of the consultancy firms or in operating companies. Not much of a difference, but if you have a long term, it is mainly trust, right? The GPs and the whole ecosystem. So if you're with the firm for a longer period of time, you will be surely rewarded monetarily. They are equivalents to ESOPs, which you get in operating companies. So also you should have the interest. Sometimes you have to be waiting patiently, and then rewards will come. So overall, to sum it up, if somebody wants to get into this space, the opportunities are there. They have to be patient and come with a long term point of view. The way a CFO looks at when you're in a team, the investment team usually is very optimistic, positive. The CFO is the only guy who has those questions. Hey guys, what if this goes wrong, right? And suddenly everyone says, "Hey boss, why do you have to bring these questions now?" So I think it is a very complementary skill which the CFO brings, and you should have somebody to ask those right questions. Right now, the investment team or entrepreneurs, if they are not positive or have they think that everything is possible, and so that's why they are there. But as a CFO, you have to ask those raise questions, raise the red flag.
Do you want to add something else to this? Like, you really wanted to emphasize that finance guys should not just be in finance.
Yeah, see, from a finance point of view, we have a very strategic advantage, right? So, if you ask me from my fund point of view, I get, or I'm generalizing it, it's me and my team. We get a bird's eye view of all our portfolio companies, right? So, how what is working well in one portfolio, what is not going well. So, we are at that point where we see both from how the investment team views it, what the founder says, how the companies are operating. So you have that full portfolio of say 40 companies, which I would not say, if you're taking my example in our fund, say one team which may be looking at it, while they have a high level idea of what is happening with the other sectors, we can go deep and share our learnings with everybody in the team. So that's one good thing. And same is the case with portfolio finance folks. They have that what do you say, a bird's eye view of the whole company. I think they should give their inputs not only in finance, even in operations, say logistics. You're seeing something happening in one sector or one team. You should speak out, go get your hands dirty, and work with those teams. High level, there's nothing stopping you from reaching out and working with other teams or other areas.
Okay, so basically, chartered accountants and finance focused professionals can enter operating roles, can enter the investment team. Of course, they'll have to acquire a few skills here and there, but they would be a fit as well, not necessarily just the finance team.
Yeah, yeah, absolutely. And the enough number of cases you can see in other funds where you have these folks already doing well and performing there.
So, what is a mindset you have vis-a-vis which would be different from, say, a CFO of, who's working outside the VC or the startup space?
Yeah, I think basics are same, right? The only difference is we are not an operating company. It's more quality. We don't. We anything we get into, what you have to do is you have to double click and go deep into it. We don't have those whole huge teams or huge volumes to turn around. But you have to keep a more what do you say? Uh, we have to get deeper into each and everything, like say if you have to get into, we're doing a FTD for a company. If there's an issue from a regulatory point of view, from a business point of view, what calls to take, how to resolve it, all those things are important. But the basics are same. We have to what we do is we try to implement what we have learned in any company. We don't have to reinvent anything. So what you do learn in one portfolio or in the company, we try to replicate across portfolio companies.
Okay, cool. So, Chetan, thank you so much for your time. I think
Thank you, Chantel. Thank you so much for having me here.